What's poppin', people, and welcome to the Crypto Corner. I'm Robert. And before we get into the video, let me encourage you, beg you, and bribe you if I have to smash that notification bell and subscribe. Now, on to the video. What's poppin', people? Welcome back to the Crypto Corner. I'm your host, Rob, and I'm coming back with another video for you. And this one will be about the 7 biggest Bitcoin myths. But before we get into it, this particular video is brought to you by the like button. So if Robert Downey Jr. is the reason you like the MCU, hit the like button. If you cut the crust off your bread still to this day, hit the like button. Or you hate it when someone is using their cell phone on the speaker in the grocery store, hit the like button. Not hitting the like button could have some side effects, which includes itchy, watery eyes, hair loss, tennis elbow, eczema, and bloating. So with that, we're going to go ahead and get into our video here. And it's the 7 biggest Bitcoin myths. So we want to go ahead and deal with this, right? So there's 7 myths. And, Bitcoin hit certain all-time highs and it's gone down. And, but over time, Bitcoin is definitely one of the hottest assets out there. But with that is going to come a lot of rumors, a lot of myths, and certain negative narratives. And we want to dispel with those narratives right now. So myth number 1. Bitcoin is a bubble. While it's true that some people buy Bitcoin as a speculative investment seeking big returns, that doesn't mean that Bitcoin itself is a bubble. See, bubbles are economic cycles characterized by unsustainable rises in market value. And so they eventually pop when investors realize prices are much higher than an asset's fundamental value. Bitcoin is occasionally compared to an infamous early speculative bubble. The 17th century Dutch, tulip mania way back then. It was oversold and it just went to zero. It crashed. It went to nothing. Okay. But it's not like that. Bitcoin has gone through multiple price cycles over the course of, 12 years and has recovered each time to achieve new highs every single time. And as with any new technology, boom and bust cycles are expected. That's what Bitcoin is. That's what cryptocurrency is. It is cyclical. Okay. So, for example, at the end of the .com era, in the 90s, Amazon stock nosedived from around 100 to just about $5. Look at where it is right now, guys. So some major Bitcoin investors believe that Bitcoin's oscillation forms a pattern typical of young markets. And Bitcoin is a young market. It is only 12 years old. Okay, this entire crypto market is very young compared to all the rest of the different assets out there. So let's get into the next myth. Myth number 2, Bitcoin has no real world uses. I beg to differ. I don't agree with that whatsoever. See, critics like to claim that Bitcoin isn't useful in the real world, or if it does have a use, it's mostly useful for illicit activities. Not true. Not true. And then let me ask you this. Does cash promote illicit activities? Have anyone done anything illegal for cash? So neither of those statements are true. Bitcoin has a long history as a means of making payments to anyone in the world, all without a bank or a payment processor in the middle. And it is increasingly being used as a gold-like hedge against inflation by major institutional investors. So if you guys are paying attention out there, you look at the American dollar and look at Bitcoin. Which one are you betting on? The real story is in recent years, Bitcoin has become increasingly popular as an inflationary resistant store of value, much like gold, leading to Bitcoin's nickname, digital gold. And a growing number of major funds and publicly traded companies like Tesla, Square, MicroStrategies have bought millions or even billions of dollars worth of Bitcoin as a means to better manage their assets. So you're going to tell me that it has no use, there is no store of value? I'm not sure that's the tact that we should go on. These people are putting millions and billions of dollars behind Bitcoins. I just don't think it's going anywhere soon. But much like gold, Bitcoin is scarce. There's never going to be more than 21 million Bitcoin. Gold, of course, is heavy, bulky, difficult to transport and store. Bitcoin, on the other hand, can be sent digitally as easily as sending an email. Bitcoin received negative attention in early years as a means of payment on a dark web, but when the first big dark web market was shuttered, Bitcoin prices went up after just a few days and continue to rise. Bitcoin is the real deal. Let's jump into myth number 3, which is Bitcoin doesn't have real value. While Bitcoin might not be backed by a physical asset like gold, neither is the US dollar. It's virtually any other form of fiat currency. Nothing is backed our dollar, and yet we still believe in the dollar, right? Or still use it. Bitcoin is hard coded to be scarce, which helped make it resistant to inflation. Okay, it is hard coded. There is a limited supply. Inflation with fiat currencies can occur when large quantities are created, thus diluting the existing supply. Okay, so we have to keep that in mind. There will only ever be 21 million Bitcoin. This scarcity is a major driver of its value. People, remember, Bitcoin used to be less than a penny. And at the time of this video, it's about $33,000 for one Bitcoin. Not only is the supply capped, but the amount of new Bitcoin being mined is declining over time in a predictable way. Every 4 years in an event called halving, block rewards paid to miners in the network are cut in half. All right. So it's slowing down the production. This helps ensure that the supply is always reducing, which, by the basic economic principle of scarcity, has worked to keep the price of Bitcoin broadly trending upwards over the long term. Just look at the charts, people. Just look at the charts from the beginning and look at it now, spanned out, and then you will see that Bitcoin has been growing more and more each and every year. There has been parabolic rises and there has also been crashes, but over time it is up, 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 and up. Again, let me say as a disclaimer, I'm not saying everything goes up forever, okay? And this is not investment advice. This is just myth busting. Myth number 4, Bitcoin will just be replaced by a competitor. I don't know about that. Bitcoin was the first really successful digital money, and while new cryptocurrencies have long promised to overtake Bitcoin via new features or other advantages, none have come close, not even close. Through thousands of rival cryptocurrencies, even though they have been created over the past decade, Bitcoin has always been and remains the most valuable cryptocurrency by market cap by a significant margin. It also the most popular, making up around 60% of the crypto market. Then, of course, we have to look at the Bitcoin dominance and things like that. It's a little bit less than that, but that's where it has been around the 60% mark. Reasons include Bitcoin first mover advantage. That's a big one, along with the purity of its mission as a decentralized and open currency, which isn't to say that competitors aren't welcome to try. Bitcoin is decentralized, meaning it's operated by a global community of miners and nodes instead of a central authority. That is the whole idea behind it. In order for the upgrade to be accepted, a 51% majority of the community must support the change. This allows Bitcoins to adapt and evolve as required, as seen in Bitcoin's segregated witness, okay, or SegWit, okay, upgrade in 2017. Because the software is open source, developers who aren't able to gain community consensus can even create a hard fork of the Bitcoin blockchain and make an entirely new cryptocurrency. For instance, Bitcoin Cash was created this way. Of course, a huge amount of innovation is happening in the space, so it's conceivable that a bigger rival could emerge. But given current circumstances, most experts don't think Bitcoin being replaced anytime soon is a likely outcome. I do not think so myself. Myth number 5, investing in Bitcoin is gambling. While it's true that Bitcoin has experienced significant price volatility over the last decade, that's to be expected of a young and growing market. Since Bitcoin Genesis block in 2010, it has steadily gained long-term value with a market cap exceeding $1 trillion. Okay. And as Bitcoin has continued to mature, a robust regulatory structure in countries around the world has helped to attract a wave of institutional investments. You look at hedge funds, you look at Tesla, they're popping up everywhere. There's a fundamental rationale for a Bitcoin investor to believe that the value of their holdings should rise. Whereas in a casino, the odds are tilted in favor of the house. Of course, there is no guarantee about future performance or continued results, but Bitcoin's long-term trend line over the last decade has been upward. One popular investing strategy for reducing the impact of volatility is DCA, or dollar cost averaging. Bitcoin's volatility appears to be on the decline, A recent Bloomberg analysis compared Bitcoin's recent bull run to the 2017 boom and found that volatility is considerably lower this time around. Why? The rise of institutional participants and the general stabilization effect of crypto going mainstream. So it's stabilizing because more and more people are getting into it. Now, whether Bitcoin or any other cryptocurrency has a place in your investment portfolio depends on your personal circumstances, risk tolerance, and investment time horizon. Again, I say this is not investment advice. I'm just giving you the facts and busting myths. With that, myth number six, Bitcoin isn't secure. The Bitcoin network has never been hacked. Let's keep that in mind, okay? But let me explain. It's an open source code, has been scrutinized by countless security experts and computer scientists. Bitcoin was also the first digital currency to solve the double spend problem, making trustless peer-to-peer currencies a reality. Further, all Bitcoin transactions are irreversible. Many misconceptions around the security of Bitcoin stem from attacks on third-party businesses and services that make use of Bitcoin and not the Bitcoin network itself. There is a difference. High-profile hacks of early Bitcoin companies with flawed security procedures, like the one that hit the early Japan-based exchange, Mt. Gox. The occasional data breaches, like the one that impacted users of the wallet provided by Ledger, have made some users question the security of Bitcoin. But remember, those were those particular exchanges and those particular devices. It's not Bitcoin itself. Bitcoin's core protocol has functioned securely with 99.9% uptime since its creation in 2009. A vast amount of computing power secures the network, and the miners that power the network are distributed throughout the world with nodes in 100 countries, which means there are no single points of failure. And last but not least, the big one that's come out, even with Elon Musk and his tweets, myth number 7, Bitcoin is bad for the environment. Well, Bitcoin mining is an energy intensive process. That part is true. But determining the environmental impact is hard. For one thing, all aspects of the digital economy require energy. Consider the entire global banking system needs energy. And all the energy required to process bank transactions and power office buildings, ATMs, local branches, and much, much more. All that requires energy. Lots and lots and lots of energy. Recent research by the New York-based fund ARK Investment Management concludes that Bitcoin is much more efficient than traditional banking and gold mining on a global scale. Now think about how much energy it takes to mine gold. It takes a ton of energy. Now, a significant portion of Bitcoin mining is powered by renewable energy sources, and that is growing, either wind power, hydropower, solar power. Even so, El Salvador would like to do use their volcanoes to power it. So they're making big strides in that. The actual number ranges from 20% to more than 70%, according to Cambridge Bitcoin Electricity Consumption Index. So look at that. It just really depends. But there are a lot of strides moving in having a greener Bitcoin. The Cambridge researchers conclude Bitcoin's environmental footprint currently remains marginal at best. And last but not least, an argument can even be made that the economic incentives inherent to Bitcoin mining are helping drive sustainable energy innovation as miners constantly seek to increase profits by lowering their electricity costs. In a world where renewable energy is fast becoming the cheapest option. This is what people are looking for. They want it cheaper. And, it really goes back to when Elon Musk made his tweet and he was just talking about wanting Bitcoin to be more environmentally friendly. Well, Bitcoin is already heading in that direction. I hope you guys got something out of the video. I just wanted to bust these 7 myths when it comes to Bitcoin. Sound off in the comment section down below.